Hey, good morning, small business owners. Welcome to Monday Morning Metrics. My name is Rebecca Berneck, and I am the founder and big head of Officeheads. We are a financial management services company located in Evanston, Illinois. And Monday Morning Metrics, basically every Monday morning, I jump on Facebook Live right around 10:30 Central Time, and I talk about all things small business operations and finance and operational thinking and QuickBooks and how to use your financial reports to operate a healthy business. So thanks for joining me as always. We pick a different subject every week. And so this week, a lot of times it's timely on what I'm doing. So this week I'm tackling the question of, can I afford to hire somebody? Officeheads is going through a growth spurt. And so actually today, for the first time ever, we've got 2 people starting. So this is very timely. And so I can use personal examples and I can use maybe other examples of whether or not you can afford to hire somebody. So I'm going to actually share my screen so I can run through a quick model that I whipped up this morning just to kind of walk through your thinking and how you can calculate whether or not you can afford to hire somebody. And so if you have any questions, use the comments below, but we're going to just jump right in. So hold on a second. I am now going to share my screen. Okay, so what we have right here is the beginning of a calculation. And the question first is, how am I going to calculate the cost of a new hire? So in this particular example, if it's an hourly employee, I'm going to figure out, well, how many hours per week do I expect this person to work? And so I'm going to use, for an example, a 40-hour-a-week person, which is a full-time person. And then what is the hourly rate of pay? And so I'm going to put in $20 an hour. And so this calculates what the cost is going to be for a full-time person, paying them $20 an hour. So it calculates that's going to be about $800 a week. It's about $41,600 for annual, because I'm going to then multiply that 800 times 52 weeks in a year. Then divide that by 12 to figure out if I pay them on a monthly basis, it's going to be $34.67. If I pay them semi-monthly, it's going to be $1,600 each payroll. And if I pay them every other week, it's going to be $1,733. So that's the first step of saying, okay, what is the base cost of an employee? Well, what happens if this employee happens to not be hourly, but is a salaried employee? So let's say I'm going to say, well, you know what, this is an exempt employee, so I'm going to pop in, I'm going to pay them $50,000 a year. So I kind of backtrack that. If they're expected to work 40 hours, that's about 24 hours, $24 an hour, $692 per week, 50, of course, a year, and then the various different payrolls. So this is how you calculate the base compensation for a new employee. The next thing I want you to think about is whether or not this person is W-2 or 1099. Now, there are a number of websites online that talk about whether someone should be a W-2 or a 1099. And this is not something that you get to choose, by the way. This is something that the IRS has strict regulations on, whether someone is a W-2 or a 1099 employee. So I'm going to I'll find a link from the IRS and toss it into the comments, into the base of this once we're done. But basically, the gut that I use is, number one, is this person a part of your general operations? 2, are you telling them what to do, or are they doing it on their own behalf on how to get the work done? And 3, are they using their own tools? So for example, if I have to hire a bookkeeper and I'm saying, hey, this is the clients, this is how you do it, and you're using my computers, that's a W-2 employee. If I'm just in a pinch and I need to hire someone, they're using their own computer and they're doing bookkeeping their way, but helping in a pinch, then they might be a 1099. So I'm going to enter some links in there on whether or not how you select whether someone is a W-2 or a 1099. But let's go back to our model. Let's say that they are a 1099. So you don't have any other expenses for this particular person, because a 1099 doesn't get benefits. You don't pay payroll taxes. There shouldn't be any payroll fees. And there's no other expenses for tools and various different things. But let's say this person is a W-2 person. And so based on, let's say you look at your previous P&L and come up with a metric that says, well, how much do you spend on a typical employee for all of their benefits? So let's say you spend 20% of their base pay on benefits. And then, of course, there's payroll taxes. I tend to just use 13%. That's conservative and a little bit high, but it's good for me for all of when I do my analysis. Next is payroll fees. I know when I use Gusto payroll fees that it's $6 a person per month. And then other, well, okay, other is I have to get them a voice over IP telephone, all of the digital tools and software as a service that they need. So it's actually about $250 per person, per employee for Officeheads. So I'm going to throw that in there. So these are my other expenses if it is a W-2 employee. And notice that I said whether it's salary or whether it's hourly. And so, of course, this one's a little bit higher because we use a different example. And then we have some percentages here, so it adds those percentages. So next, I want to talk about, so there you have it. Here's your total expense. And I divvied this up instead of by payroll, just by month, and then annually, because we're going to then try to figure out whether or not you can afford to hire this person. Next, we're going to talk about, does this person generate revenue? Well, again, interestingly enough, here at Officeheads today, we've got two different types of people showing up. We've got an admin who is helping, we're doing like a job share thing. So we've got an admin, and then we also have a bookkeeper who is going to generate revenue. So this is a very pertinent question on whether this person is going to generate revenue or not, because that actually takes away then from the actual cost. So now let's go back to our model. If they don't generate revenue, let's take this one out because that one seems to not be working. But if they don't generate revenue, you can't offset that cost. But if they do generate revenue, let's say, what is their billable rate? So I can bill this person out at say $65 an hour, and I don't expect them to be billable for that entire 40 hours. They actually have to have some downtime, otherwise they'd be working way too hard. So we usually use a utilization rate of 85%. Now, I've used this before in terms of utilization to actually understand whether or not your employees are working efficiently. So here then is the math to say whether or not you have a profit and loss on this particular employee. So if I hire someone back to the beginning, telling the story, 40 hours a week, $20 an hour, they are a W-2 employee, and they do generate revenue, I actually make some money on this person. So yes, I can afford to hire this person. However, I do want to, let's pull this. Well, actually, let's go back and use another example. Let's say that they don't generate revenue. Let's say this person is administrative. And so now let's take a look that this employee who is W-2 is going to cost me about $48,000 every month. So now you ask yourself, can I afford it? And this is when we talk about profit. Now, I have a number of Monday morning metrics where we talk about profit. I'm going to do really quickly on the 4 things I like to look at when you have a profitable company. What do you do with your profit? One is distribute that profit to your shareholders. Another is you pay down your debt. But now we're going to talk about the other 2. One is you put it in savings, because a best practice is 3 times operational expenses you should have saved in the bank. And the other one is reinvestment into the organization. So you can use both of those when it comes to profitability on whether or not you can afford to hire this person. So one, if you're profitable, if you look at your P&L and month over month over month, you have at least $4,800, $4,900 every month in profitability, that means you can absorb this person. That is awesome. If you don't right away have this, and that's if this person is right, of course, we talked about they're not bringing in any revenue. But let's say this person does bring in revenue, but just as much as we can't expect this person to work 40 hours and be billable for 40 hours, we can't expect them to hit the ground running and be 100% utilized right away. So the next question is, how long does it take this person to ramp up before they can generate the revenue to offset the expense? And so, and I'll use Officeheads as an example, it usually takes about 3 months. I expect them to be about 35% utilized the first month, about 55% utilized the second month, and around the third month, I figure that they're up to speed. We've given them all the training, and they should be bringing in that revenue that I expect. So that means that in month 1 and month 2, there's a portion of that profit that I actually need to invest in. So whether that comes out of my savings that I have in there to be able to invest in, or a line of credit, or a loan on the other side, or maybe even a shareholder loan that I want to put into the organization for the first couple of months to support this new employee, to get them up to speed until they can bring in the revenue that they need. So let's one more time go take a look at this model and walk through it. You first figure out how many hours a week and what you're paying them. You then figure out whether or not they're W-2 or 1099 according to the IRS. Then you figure out whether or not they are bringing in some revenue, and to figure out whether or not this individual is bringing in a profit or a loss. And then you look at your profitability to see whether or not you can afford to hire this person. Excellent. There you have it, my quick little model of whether or not you can afford to hire somebody right now or not. Again, please leave comments below if you have any questions about this particular subject matter or any future subjects that you want me to bring up. Here's another one. If you actually want a copy of this model to be able to run your own little analysis from time to time, send an email to mondaymorningmetrics@officeheads.com. I'd be happy to send you a copy of this Excel file, and then you can, whenever you have to ask this question, can I afford this? Boom, you've got it, so you can run your own little model. Thanks again for joining me. I always love to see that people are interested in finance and efficient operations, looking for profitability at the end of the day. Please keep joining me on Monday Morning Metrics. Leave comments, and thank you so much. And until I see you next week, have a great and profitable week.